Yes, absolutely. My name's Rebekah Tobias. I'm a managing director at MARCOL. We are a private investment firm, family-run business investing in real estate and private equity across Europe. So I was moderating a panel on ESG, which is of course a very important and prominent topic at the moment on environmental, social, and governance and how this impacts our investment decisions, particularly in real estate, which accounts for close to 40% of all carbon emissions globally. And we have big hurdles and challenges with meeting net zero targets between now and 2050, which is what has been set by a number of large global real estate investors. So we have a long way to go, and it's how we're tackling those issues and putting the right plan in place. I do, even though market values are falling as a result generally of rising interest rates and increased inflation. I think everyone's under a bit of pressure, but the ESG is still maintaining its priority there, because we won't be able to hit these net zero targets otherwise and reduce our carbon emissions generally. And with reporting requirements becoming much more strict, especially if you're raising capital and have global LPs concerned about these issues. So I think it has to be at the forefront of all discussions going forward. I think 2023 we're going to see a lot more. And as long as those discussions hopefully are backed up by action and people, taking control and really driving this forward within their own organizations, we can all come at it, with a collective view, which would be the best outcome. I think it's really so far the lack of transparency and accountability of our reporting. It's the lack of data management and how do we manage good data. The quality of the data is really important, and we just starting now to use the right tools and get those in place to report more accurately and to be able to measure the quality of the data in a better way. So that's only starting to happen. It's then just how we implement that internally, which has to happen quicker, to be honest. We've been quite slow at implementing some of the technology in particular in the industry that's available today to help us create more transparency and accountability of how we go about reporting it. So that is evolving, and I think we're all on a journey in regards to that, and that will continue. So having these discussions is great, but then we also need to back it up with the action. Yes, I think we're going to see a real trend, which we're already seeing, from being a generalist investor to more sector specific. And there's going to be winners and losers in each case. But I also think that's important because, as we've seen this morning in the presentations, that those that were following the best, sector trends from the real estate fundamentals point of view are now, coming out on top essentially, and those values are still going up despite market downturn, or at least, holding value much easier. So I think we're going to see more and more focus around sectors. We generally tend to also focus on sectors, although in the past having been more generalist, and our focus mainly going forward is going to be more on the senior living. Hopefully we're looking into areas to invest there, as well as self-storage, which is generally quite resilient, particularly in a downturn, and tends to actually perform better in periods of volatility. So we're focused on those two key areas, and then also being opportunistic, selling off some assets where we see, especially with refinance risk coming up. I think that's going to be a huge focus for a lot of investors, is whether it makes sense to refi or sell over the next year or so. So it's going to be an interesting market for sure.